All right, today we're doing something a little different. We're not just talking about investing, we're going to act like architects. We're going to design a modern financial portfolio from the ground up, using a powerful four-component blueprint that's built for the world we live in right now. So let's get to it.
And look, this isn't just some abstract theory. We're talking about a practical strategy here. A super simple one that could take you about 5 minutes to set up, and oh yeah, it's been beating the market on average. Now that gets your attention, right? So let's see how it's done.
You know, any good architect will tell you before you can build something new and strong, you first have to tear down the old rickety structure. So that's where we're starting. We're going to dismantle some outdated financial ideas that might be secretly weakening your portfolio.
Okay, let's start with the big one, bonds. The classic safety net, right? The thing that's supposed to protect you when stocks go down. Well, here's the modern reality. In the last 5 years, they haven't just failed to protect you, they've actually lost you 5% of your money. That's not a safety net, my friends. That's a trapdoor in the foundation.
And next up on the chopping block, dedicated international funds. Now, the idea made sense years ago, diversify geographically. But let's be real. Today's biggest U.S. companies are already global monsters. The result of adding these extra funds has been, well, kind of sluggish. Averaging just 5% a year, that's less than half of what the other parts of our blueprint can do. All right, the demolition is done, the site is clear. Now, it's time to pour the foundation. This is the first and most crucial part of our new structure, the S&P 500 core. It's all about stability and broad, reliable growth. This is the bedrock we'll build everything on.
So for our foundation, we're grabbing an ETF that tracks the S&P 500, something like SPYM or VOO. These funds just hold a tiny piece of the 500 biggest companies in the US. The really cool part is that the index is kind of self-cleaning. Strong companies stay in, weaker ones get kicked out automatically. And with an average return of over 11% a year, it's about as dependable a base as you can get.
And just look at what this foundation is made of. We're talking about the absolute titans of the modern world. NVIDIA, Apple, Microsoft. These aren't just companies, they're basically economic empires that form the very core of our structure.
Okay, foundation is solid. Now we build up. Every modern design needs a soaring, eye-catching feature. And for our portfolio, that's the high-growth spire. This is the element that's designed to just shoot for the sky and capture the momentum of our most innovative industries. And for that spire, we're looking at a fund like QQQM. It tracks the NASDAQ 100, basically the biggest and baddest tech and innovation companies out there. And get this, over the last decade, it has delivered an average yearly return of over 19%. Yeah, 19%. That is some serious firepower. So what's the rocket fuel behind that kind of growth? It's pure, unadulterated innovation. The top holdings in here read like a list of who's literally building the future. This is the part of the portfolio that has its eyes set firmly on what's next.
Now, if you look at the breakdown here, yeah, it's pretty obvious. It's all about technology. And while that's fantastic for that explosive growth, it also introduces a lot of volatility. It can get a little wobbly up there at the top, which means our blueprint absolutely needs a strong counterweight.
So to keep that high-growth spire from swaying too much in a storm, every great structure needs an anchor. This is our stability core. It's designed for resilience, for protection when things get rough, and for generating a little income. It's the component that makes sure our whole building can withstand anything. And our anchor of choice is a fund like SCHD. This is a value ETF. It's not about the flashy new thing. It's about solid, dependable, recession-proof companies that pay you consistent dividends just for holding them. When the high-growth stuff stumbles, this is what provides the stability and the cash flow. And the holdings in here, they look totally different. You're not going to find the next high-flying tech name. Nope. Instead, you're going to find the boring, steady companies that form the backbone of our economy. They provide that reliable strength that keeps our portfolio grounded. And just look at this contrast. Remember how our growth fund was basically all tech? This stability anchor is everything but tech. We've got industrials, financials, healthcare. This right here is a masterclass in what portfolio balance actually looks like. It's the yin to our tech growth yang. Okay, we've got our foundation, our spire, and our anchor. Now for the last piece, the final, most innovative component. A dynamic element that our source calls a momentum unicorn. And honestly, that's the perfect name for it, because it's designed to blend high growth with surprising toughness. This is the secret weapon in our blueprint.
This is SPMO, the S&P 500 Momentum ETF. Now, its strategy is so simple, it's genius. It looks at the big S&P 500 list and it just buys the 100 stocks that have had the strongest performance recently. Then every 6 months, it rebalances, always holding the current market winners. It's literally designed to ride the hot hand.
And you know what? It works. Like, really well. Since it started, SPMO has returned an average of over 18% per year. That's right up there with our aggressive tech fund. But that raw performance is only half the story. It's not even the most amazing part.
This is the magic trick. Look at the 2022 market crash. It was brutal. Our high-growth tech fund, QQQM, plummeted 32%. The broader market, SPYM, fell 18%. But SPMO, our momentum fund, it only dropped 10%. Let that sink in for a second. It delivers high growth in the good times, and it provides incredible protection in the bad times. It truly is a portfolio unicorn.
So there you have it, our 4 powerful components: the foundation, the spire, the anchor, and the unicorn. Now let's stop talking about the pieces and start building. We're going to walk through 3 custom builds, 3 distinct blueprints designed for different people at different stages of life.
First up, the aggressive builder. This is for you if you're younger, with a long time horizon where maximizing growth is everything. We lay a 30% foundation in the S&P 500. Then we get aggressive with 25% in our tech spire and another 25% in the momentum unicorn. We'll keep a 20% anchor just to keep things balanced. Next, the balanced architect. This is for someone maybe 10 or so years away from retirement. The goal shifts a little bit toward preservation. So, we dial back the risk by increasing our stability anchor to 30% and trimming that high-growth tech spire down to 20%. But we keep the core foundation and that powerful momentum element strong.
And finally, we have the preservationist build. This is for those in or very near retirement where the name of the game is protecting your capital and generating income. So our stability anchor, SCHD, becomes the star of the show here, at a whopping 50%. The foundation remains solid, but we scale back the growth and momentum elements significantly to keep the portfolio safe.
So, we've done the work, we've cleared the site of old, flawed ideas, and we've laid out a complete architectural plan with 4 incredibly powerful components. We've even shown you 3 different models to get you started. The blueprint is now in your hands. The only question left is, what are you going to build?